This is all really good. It's nice to see gold unfolding like it should. The key critical levels, it means we should see a little bit of weakness, which is what I kind of want as a precious metal investor. I'd like to see a pullback, and then it'll be an opportunity to get in before the next major run.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 21st through October 28th, 2024, while supplies last. This week we feature gold half-ounce backdated Canadian maples at just $110 over melt. We also have backdated silver 1-ounce Britannia at just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Yeah, pleasure to be back, Elijah. Thanks for having me.
Well, it's great to have you today. I did want to discuss gold and silver. We're seeing silver above the 33 level. It almost touched 35 the other day. And gold has touched the 2750 level approximately. And I know this is a key level for gold that you've been looking out for quite a while. So can you give your outlook for where gold goes from here?
Sure. Yeah, I think gold, I really like gold as a barometer of what's going on with major markets. And if we take a look at the monthly chart of gold, we can use a simple tool called Fibonacci extension. This tells you the momentum from a previous move, if that move continues, where it should go. And if we were to really go from where the bottom was of the beginning of the previous super cycle back in 2001, 2002 area here, and we go all the way up to the high. So this measures the momentum of that rally. And then we bring it down to this low in 2015. If we carry that forward, I use two measured levels on here. I use the 618 level and I use the 100%. And I use this for any asset class, not just gold. This works really well for everything on any time frame. Fibonacci to me is one of the most powerful tools. But based on this rally up, the strength of this pullback, the general rule is if price comes up to the 618 level, which is a 61% rally of the previous rally, and it takes a pause, then we're usually going to go up and hit that 100% measured move. That's what one stands for. This rally up is equivalent to this initial rally. And so this is a pattern that started obviously 13 or 20 years ago. This is a huge pattern. We can even draw another one from this low to this high and this low, and it actually comes out to the same spot. So we have multiple massive cycles and Fibonacci levels coming out to this price. And what is really interesting here is when we look at how gold performs at certain stages. So we've had this multi-year pause. And during this pause is when stocks have skyrocketed. This was right after COVID. Nobody really wanted to go into gold. We actually saw a rally up into COVID because the world was starting to get very nervous of what's going on. But overall, stocks took off and gold fell to the sidelines. Nobody wanted it. And then suddenly now we've been seeing gold rip higher. And there's all kinds, we got bubbles in stocks and real estate, all of these things over the past year and a half. And so investors around the world are getting nervous. I like to look at gold as kind of like planet Earth is like the hive mentality. When gold moves, it's the whole planet, people trying to get away from risk. So they get away from stocks, real estate, currencies are all over the place. And so when gold starts to take off and outperforms the stock market, this is a big warning sign. And we've seen the same thing in the past. We saw gold start in a major super cycle back in 2003, 2004, broke out. We saw a multi-year pause and stocks ripped higher during the 2006, 2007. And then out of nowhere, we just saw gold start to take off. And this goes right into the peak of the stock market in 2008. And that's because people were getting nervous. We had bubbles in stocks, real estate, currencies were all over the place. And then gold pulled back about 34% from there. So this run up that we see here, this global fear, is the same run up we're seeing right now. We're also seeing the US dollar index rally with gold. And when the dollar rallies, that usually means there's global concern as well. The dollar tends to perform very well. So there's a few things at play here. Big picture, we're kind of at the peak for gold. It might want to rally higher just because it has a lot of momentum. But overall, the easy kind of measured move is done for gold right now. And so the next awesome opportunity is going to be when gold and silver pull back and we have a bit of a recession. And that is going to be like a really great opportunity to get into precious metals again, hopefully in 2025. And after we do that, it's going to be something similar to this. We're going to see the market shake out, and then we have a multi-year rally in gold and silver, and we're going to see the same thing. So gold might pull back, and then we're going to see a huge multi-run rally in gold, 3,500, 5,500, whatever that top will be for gold. So this is all really good. It's nice to see gold unfolding like it should at key critical levels. It means we should see a little bit of weakness, which is what I kind of want as a precious metal investor. I'd like to see a pullback, and then it'll be an opportunity to get in before the next major run. So silver is kind of doing the same thing. Silver has come to life as well.
We are seeing silver come to life, and a lot of people that I'm talking to are expecting silver to continue to run, possibly up to the $50 level, because it doesn't seem like there's a lot of resistance at these highs we haven't seen for over a decade. So your perspective on that, it sounds like though you're looking for a pullback from here.
Yeah, so silver did a lot of what gold did. It had a multi-year pause, and then people piled into silver just before the 2008 crisis, and silver had a big pullback. If we use Fibonacci extension from where we are right now, we can kind of take a couple different levels through here, and it gives us kind of an upside target. So based on that same type of analysis, we have the rally up, we have the pullback, and we've come to the 618 level, which we've had that pause, and now we're going up, and 35, 36 is kind of the peak. If we just draw a line across this level, you can see it's also these significant levels on this chart in the past. So if we just zoom in a little bit, you can see here, this is going to act as resistance, another significant top. We had a couple months where it kind of hit that level. We had it actually above that price and found support for a bounce. So I don't think there's a whole lot more upside again in silver. 50 would be a pretty significant run. That will be, to me, like some blow off phase, and it'll probably be given back very quickly because that's going to be an explosive parabolic move. And usually what goes straight up is going to come straight back down. To me, that $36, 35, 36 is kind of the upper level just based on momentum, based on where gold is. As you know, silver is kind of the wild card, though. It can just pop and take off. It can also drop like a rock. So silver is the definitely more speculative, more volatile play. But again, they're both right now in an uptrend. They're both lurking up near resistance. And so people just need to be aware. I don't see there being huge upside potential from here. I think just knowing we're in this pattern and that there's going to be some type of pause for several months, and it'll be an opportunity to, I think, invest back into precious metals and catch that next leg up. Because I think once we have a market correction, I believe silver will probably be like $50 and $80 and potentially higher, much higher. So there's a lot of potential, but it will probably be pretty volatile. In 2008, we saw silver. It ended up correcting, 60 something percent in that correction. So there's a lot of volatility. And to me, there's more downside risk right now than upside. But the downside is the opportunity. It's knowing it's coming. It's knowing that there's going to be a place to get back into the precious metal space in the near future.
So I think that's key. Your perspective is this looks more like 2008 than 2011, because a lot of people are looking at the chart. Oh, it's going to break out. It's going to go back to 50, but they're comparing. In your view, maybe they might be comparing kind of the wrong time frame.
Yeah, I think a lot of people are probably like thinking over here. They're thinking we've already had the correction, and I could see that. You got this pullback in this move. We've had this pullback in this move. But based on super cycles and where one ends and a new one has started, I'm a notch before. I'm back here at this peak here where we're going to go through some type of pullback in silver before it really, goes parabolic and takes off. So it'll be interesting to see how that unfolds. Of course, if there's a black swan event, it could spark oil, could spark precious metals to take off. But to me, this pattern, this very strong pattern is playing out. I believe, we're going to see more so of a pause and pullback first before we go into that $50, $80 silver mark.
When you talk about this super cycle that we're in right now, and you've talked about this before on the show, that we're likely heading into a crash, and for the stock market. So I know you've seen some weakness recently in the stock market. Can you share with us a bit about that?
Yeah, I mean, we definitely have a little bit of weakness in the stock market. If we were to just let's take a look at the sentiment chart here. So on the right-hand side is our sentiment chart. And this kind of is a special formula that I use to get a gauge of when people are really scared and what they're doing. And typically when we see orange bars and the underlying trend is up, and we see these waves of orange bars, usually the market wants to push higher. These waves of orange are telling us people are nervous. They're expecting the price to fall. And usually the market wants to push higher. And so I do believe we're still going to have a push higher. I think the stock market is still in an uptrend. I think we're going to see another 3 to 5% move to the upside as we head towards the election. And of course, when we get these deep red bars, this is when there's a lot of damage being done to the chart back in these two levels. This is like, blood in the street. This is like a lot of selling pressure. So a lot of technical damage was done with these big, deep bouts of selling. But when we have this type of fear in the market, it's a cleansing event. And usually from these levels, you'll see a very strong rally and push out of it. So there's a lot of mixed emotions in the market right now, but we're back into an uptrend. The stock market looks like it wants to push higher, but we keep having these bouts of selling. We keep seeing waves of distribution, selling, Elijah, where if you watch the intraday charts, it's pretty interesting. You'll see the indexes move up, and then suddenly you'll see a huge bout of selling, high volume, drives the price back down, and then they stop selling, and then the prices drifts back up, and another wave of selling hits. So we've been seeing this for weeks, actually several months, and that is like big institutions. They just keep lightening up their portfolio. As we've heard, there's record amounts of cash on the sidelines. And people are trying to reduce their exposure to this market because I think a lot of people think the music is going to stop and we're going to go into a recession. And there's a lot of things supporting that. Like I believe you look at delinquencies for credit cards has skyrocketed. Mortgages are starting to have delinquencies, not just in commercial, but it's bled over into residential mortgages. Homes aren't selling anymore, and there's this massive stockpile. There's like 6 months worth of inventory of homes, and nothing is actually selling. We're like at the lowest level, all-time lows for pending home sales. There's 1 million homes for sale, but nobody's putting offers in. Nobody's buying anything. The bottom's going to fall out. And so there's a lot of things in the market that are telling us things are weakening, but it doesn't mean the stock market's going to fall right yet. I think we're going to see the elections carry through, see who wins there, and probably be some volatility, but overall, behind the scenes, what we're seeing like right now in the stock market, if I was to take a look at the SP 500, and we'll just look at, I'll go to the weekly chart because this is a good view kind of where we're at. If we go to this weekly chart, what we have going on right now in the stock market right here is the exact same thing behind the scenes, the technicals that went on over here before we went into this 25%, mini bear market in equities. So the market is getting weak. You don't want to bet against it yet, but we are definitely starting to like shudder, just like a plane stalling. It's losing momentum and it's probably getting close to going to a nosedive, but we do have several wild cards, the election being kind of one of them. And of course, nobody wants to see the stock market fall going into election. So there's probably, a little bit of extra support to keep juicing these markets higher behind the scenes. But I'd be very cautious about a market correction, in 2025 taking place. And it could be a lot bigger than the 2022 bear market. This will look like chump change, just 5% pullback compared to what I think could happen. And it's an opportunity to take advantage of the downside when it starts. It's an opportunity to buy new assets and precious metals and all that stuff when they become undervalued or fair value, whatever you want to call it, a lower price. So all of this is a good thing as long as you've got a strategy to identify when trends change and a strategy to take advantage of these moves.
I think that's very good there. And when it comes to, a major market crash coming in the future, I think a lot of people might be, hopeful that, depending on who wins, there won't be that crash. But it seems like what you're seeing from the markets is the market technicals are predicting this, and it might not even matter really who, is he in office, we're still going to see this downturn.
Yeah, I mean, the Fed, the government, and all that stuff, I mean, all they do is they keep putting things in place, and, everybody thinks they fudge the numbers. They probably do, but they keep kicking the can down the road. They don't want a recession. They don't want to see the stock market break down. And so they're just stretching things out. Eventually, like the Fed to me is kind of like front running. I mean, they've already started to cut rates. We haven't even seen the stock market go down yet. Usually they're like way behind the ball, but now they're like, oh, we're going to be way ahead of the ball. But it really doesn't matter. No matter what the Fed does, when a major cycle just happens, like with the economies, like I don't think they can stop it. They can delay it, which is why things drag out always longer than we anticipate for a market top to take place. But eventually, they just can't stop what I believe is inevitable. We're just seeing sellers closing their wallets. Things are tightening up, and eventually it's going to take over. Then the markets will collapse, and it's just a financial reset. I mean, you have your ebbs and flows, and you can only usually delay, things that are naturally kind of happening. And I think cycles like this are just natural, and that's all you gotta accept them and take advantage of them.
It seems like then right now is a hard time to play in anything, any of the markets, because the stock market is probably going to tank. The precious metals might pull back. So would you say it's a good time maybe just to be waiting on the sidelines?
Yeah, I mean, like I have this chart here of just stock market risk, but this really isn't just stock market risk. This is like just investment risk in general. And I believe we're like right up here at this peak, this red zone, which is like maximum financial risk. It doesn't matter if you invest in stocks or real estate, precious metals. I believe you're buying where there's not a whole lot of upside left. And so what we need is a contraction. We need to see that happen. And eventually we'll get into a trough where things are fair valued or undervalued. And there's a lot of upside potential that can last for a decade or longer. So yeah, just as you said, you nailed it. There really isn't a whole lot. I was just in Las Vegas with 36 other investors and entrepreneurs, and we're all talking the same thing. It's like, it is so hard to know where to put your money because everything is just kind of overdone. And, listening to all these other businesses, things have changed. The economy is definitely softening. These are big companies, big businesses. So we just have to be aware. Sometimes there's lots of opportunities, and there will be during one of these troughed opportunities. There'll be all kinds of stuff you can get involved in. Right now, it's kind of like you're better to just relax, protect your capital, don't get overly heavy in anything. Just be patient. And people aren't patient. That's the problem. They want trades. They got to get into stuff. They think they have to be busy. But the reality is sometimes like cash or not doing a whole lot of anything is actually one of the best plays. So that's kind of what I do.
Fantastic. And our viewers can go to thetechnicaltraders.com if they're interested in learning more. Do you want to share with us about that and any last thoughts you had?
Sure. Yeah. If they go to thetechnicaltraders.com, you can follow my video analysis. I kind of draw the charts every morning for traders and investors, talk about what's going on. I share every trade that I do. I use ETFs, and we just navigate these markets. We just play the indexes and bonds and currency, and we're long gold right now. So you can take advantage of that, and it's educational, and you just really copy the trades I do in my portfolio. So it's pretty simple, straightforward. There's 5 to 12 trades a year, and it's easy to kind of navigate the markets. And doesn't matter if you're worried if the markets are going down or if you miss this rally, we follow the price action. We don't predict. So we catch these market rallies. We avoid the market corrections just because we have a way to track these markets fairly closely, identify the trend that they're in, and we manage those positions to make sure we lock in gains and protect any downside.
Fantastic. Chris, once again, thank you so much for your time, and God bless.
Thanks, Elijah. Take care.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 21st through October 28th, 2024, while supplies last. This week we feature gold half-ounce backdated Canadian maples at just $110 over melt. We also have backdated silver 1-ounce Britannia at just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.